Welcome to episode 81 of Kontrarian Korner. I'm Ben Kellerin. Today we have a very special return guest on to talk with us about everything from the Fed meeting, what's going on in markets, what's going on with the commodities complex, and the periodic table getting a bid after the recent Fed meeting. We'll get into everything from precious metals, energy, copper, and uranium to anything else on his radar and kind of get the high-level view for what he's kind of expecting heading into 2026 for markets. But Purple Drink, thanks for coming back.
Great to be here, man. Thanks for having me back on.
Yes, I figured the obvious place to start after yesterday would be the Fed meeting and the rate cut there. We can kind of get into some of your thoughts on that and see where that takes us. But I think there's a lot of things on my screen that look pretty interesting right now with the way the market's reacting to it. But I'd love to hear your thoughts on the recent Fed meeting, the rate cut, what you kind of think that sets up for in 2026.
Yeah, so I mean the doves on the board didn't get any less dovish. Could maybe make an argument the hawks got a little less hawkish. Powell made a comment during the presser specifically regarding, I forget the exact wording. I think it was in the notes too, where they're effectively something along the lines of equally concerned with inflation and the jobs market. So this whole preconceived notion of hawkishness, or like a hawkish cut, where like, oh, we're data dependent, let's back up, let's wait. That didn't really seem to be the tone. So I think that kind of sets the stage for a pretty bullish next few months. Obviously, there will always be fits and starts, but I think really you've been seeing it. IWM and small caps have been leading the way since August, basically, right? I mean, the Qs have been actually having a much harder time than IWM, and IWM is out to new highs now, breaking out QQQ. There's a little bit of rotation today, and out of that into the smalls. So that probably is going to kind of lead the way now moving forward for the next few months, in my opinion, if I had to guess.
Interesting. I know a lot of very sharp people have been bagging on small caps for a long time, but you kind of see signs of life there. That's generally a pretty good sign for the overall market, in my opinion. But as far as the kind of rotation out of AI and tech and some of those areas of the market that have been carrying for a long time, what do you think is kind of like the driving factor behind that?
Well, there's just been, for lack of a better description, I mean, it's just been a factor unwind, right? Momentum has kind of been killed a little bit. There's been a lot more skepticism around this AI CapEx and its kind of durability moving forward. We'll see. I mean, I don't think the market can kind of continue higher without some participation from that corner. So, I mean, NVIDIA is going to get bid. NVIDIA always gets bid. Today's just like Oracle's getting tagged. So IWM's catching a bid. So all that stuff is already happening. But I mean, I think it's a little bit overblown. Wrote about it a little while ago. I think I posted it on Twitter. I don't even remember how long ago. It must be like 2 months ago now. But if you use shale as a corollary, right? It took a while for us after all these companies started issuing debt to fund CapEx. It took a while for that to quote unquote blow up. So a lot of these comparisons people are making. So for example, like Oracle isn't using free cash flow to fund all this stuff, right? We're still kind of early stage there. This movement of being able to issue debt to fund CapEx, it's still kind of just starting up in the AI sphere. So I don't really get the impression that this trade is anywhere close to done. It's just taking a little pause. It tends to do this every couple of months. It's not really the end of the world, in my opinion.
Yeah, I think one of the things too with the size of the CapEx spend is most of these companies couldn't fund it out of cash flow even if they want to, right? And you see the amount of money flying around. It's like it's hard to see how it ends well, but trying to guess exactly when it's going to pop is a tough game, right? Because you have to to go back to your shale comparison. You basically needed OPEC to come in and step all over the whole thing and really create problems for the shale guys in 2014, 2015. And if you're looking at AI spend and CapEx for the tech sector as a bug looking for a windshield, you kind of need another factor to come in and have an impact like you saw with shale. But I don't know if you have any thoughts on what that outside factor could be, or if it's if there's something that's kind of on your radar to watch for as far as, hey, this is when things get really messy for tech and the AI spend.
I don't have there isn't an event I have my eye on, to be honest. I mean, we've talked about it probably in the past, right? It's not really kind of how I personally trade. I tend to not react very much to news. I prefer to react to price action and what I believe it's telling me, and market cycles and stuff like that. At the end of the day, I continue to go back to the fact that capitulation in the market happened in April, so we are now 8 months off of that. My work tends to suggest that off of real legitimate, as defined capitulation, the way I look for it, we tend to have strong bulls for about 12 months or more off of that. So that takes you into April, right? I mean, I don't really see any reason to budge off of that. And if that's the case, this AI stuff is going to be fine into next year. At some point, inflation is going to start rearing its head, in my opinion, and that's probably going to wreck everything. But until it's time for that, party on.
Yeah, I think too, you saw a lot of the speculative excess get washed out in some of those names in October, whether it's some of the quantum stuff or the AI beneficiaries, all the stuff that was going parabolic for months off the April bottom. So I think that's generally a good sign for the market trying to have some fundamental view on some of these things, but we'll see kind of where that leads. But I think that takes me to the next topic, and we'd kind of been chit-chatting before on the whole periodic table getting lit up today, and that is definitely something that's interesting. And I figured we could get into the precious metals first, because that's a spot where I think we're probably setting up for all-time highs on gold here in relatively short order. Obviously, silver is now tapping 64 as we're chatting. But what are your kind of thoughts on the precious metal space, if there's opportunities in there? I mean, I like some of the silver miners. They're having a pretty good day today. But what are your thoughts on the precious metals area, where that might set up for kind of 2026?
I mean, silver broke out to new highs this month, and it's coming out of whatever, I don't even remember, an 11, like a long, more than a 10-year base. So that's going to carry you. I mean, that's going to carry you a decent amount of time. It's kind of a runaway freight train right now, so I have a hard time getting on board with it if you haven't already. I bought some silver a couple weeks ago, right when the breakout was happening. I think it was on a Friday morning when I bought it. I mean, so that's gonna take you. I think aluminum's working. You're seeing it with some of these tickers also, like Alcoa and Century Aluminum, which I want to get back into, but trying to be patient, find an entry there. And I mean, you're seeing it with palladium, you're seeing it with copper. That's just the reality of the situation, right? I mean, they're continuing to cut rates and signaling that they have no appetite to stop into like a relatively high inflation market, right? I mean, inflation is not at cyclical lows as much as they want to make us believe that it is. So I think this thing is going to just keep on going, to be honest with you.
Yeah, it is.
What do you think? Do you feel any differently?
I mean, I kind of look at some of the different areas. Like, you're not going to see inflation really get out of hand until oil starts to participate. But I mean, if you look at just the broad commodities index, like BCom or something, for example, I'll share my screen here. But you look at something like that, and that chart to me, I mean, I
Yeah,
wouldn't
it's
be
starting
surprised
it's
if
starting to move. It's just starting to move up.
I wouldn't be surprised if we're looking at like post-COVID highs on like kind of the broad commodities index. And that's when, with oil not really doing much to contribute, like you kind of see it in some of the different, I mean, even the energy ETFs are having a pretty good day, but like you look at, like you're saying, gold, silver, platinum, copper, like all these different things. It's, if it can't be printed, seems like it's been catching a bid lately. So, um, that's maybe a interesting place to look for anyone that's not already focused on it. But what are your kind of thoughts on the? You kind of mentioned copper briefly. What are your thoughts on copper being at basically all time highs if you pull out the tariff shenanigans from this summer? Like, do you have any ideas in on where that might head, or anything you're focused on for that sector?
No, I mean, so I don't have like a firm. I don't have like a big hot take on copper. I think it's gonna keep working. I have a hard time buying it. I have a hard time buying it right now, frankly, because I mean I've enjoyed the run in silver. Silver's been a good place for me to be over the course of this year. I mean, copper, I think it'll really, really, really kick into gear when China kicks back into gear. My work leads me to believe there might be some fits and starts with the dollar in Q1 at some point. So that might keep China on pause, like the Chinese stocks. I mean, that I'm looking at, call it like your Babas and whatnot. Um, so I think really those two need to be hand in hand for when it's like really game on for copper and it just becomes a runaway freight train. I, you're also seeing it like the easiest way, similar to how Newmont had to work for the gold trade to start working. If you look at FCX, and to be honest with you, I don't have a lot of appetite to own FCX because it's been such a big piece of crap forever and it's been a huge range bound stock.
Well, they
But
also had the Grasberg mine shit show to deal with, so that
yeah,
doesn't help.
so I mean, realistically, when FCX breaks above 54, so I'm just looking, this is the FCX monthly chart. I mean, you can look, this goes back to 2021. You could go back farther, but I'm trying to zoom in on when it's made this move after COVID. So really up here, right around 54, like I keep saying, similar to how Newmont started going ape shit about a year and a half ago. I would venture to guess that FCX will start doing the same thing when it's time for copper to just become like a complete, like,
Runaway
just,
freight train.
yeah, just like on cocaine, going nowhere but up. I don't really see it yet, but I mean, it's undeniable that some of these tickers, like, what are some of them, like TGB and ERO and God knows what else. I mean, they've been working great.
Yeah, I own a little bit of ERO. It's I'm waiting for that. Well, I mean, you look back at that chart, I'm waiting for it to really start to move above 26, 27, and then it's price discovery range. So we'll see how long that takes. But I think the whole copper space is interesting as far as um, some people get into the deep dives on supply and demand and the setup for where copper prices are headed. Do you have any thoughts on whether we're going to $6 a pound, we're going significantly higher than that, or if it'll take some time to really make that move? But what are your kind of thoughts on like the underlying copper price over the next year or two?
Let me think about this. All right, so this is the annual chart of front month copper futures. So you're already seeing, obviously, no duh, breakout to all-time highs. The reality of the situation, at least when I look at stuff like this, is it's price discovery mode. Like I'm not in the business of figuring out what the ceiling on this is. It's just in straight up price discovery mode. I don't know if it's 6, I don't know if it's 7, I don't know if it's 8, I don't know if it's 10. But this thing was in a range, stuck in a range that lasted from 2009 until 2024. And in 2025, it's breaking out. So you're talking about a 15-year range. 15-year range on something like this, when it breaks, it's not going to be a charming little move to 6. I could probably tell you that with a decent amount of confidence. I would venture to guess this is going to at least 7. Am I positioned for that opinion at the moment? No. But yeah, this is not a formation that stops at 6. This is a formation that goes up and to the right aggressively.
Yeah, I think it'll be interesting to see, because there's a lot of there's several copper juniors basically that I find super interesting, but I think the big guys, like you were kind of saying, will definitely be a good thing to monitor as far as when those things are really moving. But you do have like the COPEX ETF basically at was that all-time highs or close to it, and same for we're basically just getting past the 2011 high on the copper ETF for the miners. So, and that's something where I find it pretty interesting, because there's definitely more signal, in my opinion, in like long-term charts, like versus day to day or hour to hour. But maybe that's a good random segue into kind of your thoughts on like how you use charts, like what you kind of focus on, and what you think are some of the more important things to pay attention to, because that's something that I've kind of been adding into kind of what I do, as far as like, okay, like the fundamentals like have to be there, but if the chart's saying something interesting, it's worth paying attention to. So I think that'd be an interesting place, at least for me, to get into. Like, what does your process look like as far as different charts? Like, what are you looking for? How do you kind of evaluate different setups on a longer term basis, but also like shorter term, maybe looking for entries?
Yeah. So, I mean, I basically am of the opinion that the chart distills where buyers and sellers are consistently interested in entering any position, any ticker. You can kind of throw darts, whichever one you want to talk about. It doesn't mean that you always buy strength. You can also look for signs of bottoming, and there are ways to do that. So I have really 2 different ways I look at it. I look at horizontal levels. So here, let me just give you a quick little example. Pull something up. What's a good example of something that has clean horizontal levels? Okay, so I'm not in Iris Energy. I'm not in IREN, and frankly, I haven't really traded it all that much this year. But this is a good example of just clean levels. So let me take the moving averages off, because I find them to be a little noisy on this stock, especially now because it's just very choppy. I'll even take volume off, because it's really not the point. So if you just look, I've had this horizontal line on Iris. I think I wrote about this stock 2 days ago, actually. So look, you can basically find an area where demand has come in over and over and over again on a single stock by just looking at horizontal lines to find price levels where the price on a daily chart wicked off of the level. Basically, like there were buyers immediately at the same level over and over again. So here you have it in September, right around $40 a share. Then you have it again in late September. Then you have it again in late November. Then you had it again in early December. And then today it didn't quite get there. So again, it's not really a stock I'm mega interested in at the moment. It's I'm curious about it because it's just made such a fast move, but this is just like an kind of like an automatic level to at least be curious about what the stock's up to, if that makes any sense.
Yeah.
But then when I layer in moving averages, right? So immediately I use the 8, 21, 50, and 200. So let me pull only the 21 because that tells a story here, in my opinion. So ever since the stock got heavy, you can basically see one time in late November, it went to the 21 day. Again, in late November, it went to the 21 day. 2 days ago, it went to the 21 day. And this line is now sharply declining. So that's going to just be massive overhead resistance for the stock. So that's another interesting thing, right? Where it's like, oh, this thing is just constantly heavy under the 21 day. If or when it ever is able to break back over this line, it's going to probably make for a pretty violent move because it's been trying over and over again and has failed. So that's just kind of like I'm giving you a glimpse of like how I think about this stuff and applying it to just one specific ticker. But this practice, so to speak, can be applied to anything, and it can be applied on any time frame. So here, let me give you another example. I was talking about this. This name is a little slow for me, admittedly. Old Dominion Freight Line, but it's very interesting if you look at one thing, and this is the monthly chart. So I look one thing I use is MACD, which is moving average convergence divergence. Said in plain English, all it literally means is momentum. It's like starting to want to go up, or it's starting to want to go down. And then once it happens, it becomes a tailwind or a headwind. So right now you basically see this line in 2024, it got really, really, really heavy. And then in the middle of this year, you see how this bottom line is starting to hook up and it wants to turn green again. And you can see it in this monthly chart, right? Where the stock basically stopped going down right when the MACD bottomed on the monthly chart. And now it's throwing a stick today, right? Because I mean, it's one of these cyclical stocks and the rate cuts are helping it. You can throw whatever narrative you want behind it. But the chart doesn't lie. The monthly chart is already telling you, like, hey, look at this. The stock is bottoming. That doesn't mean that the price action is just going to be straight to 240 in a few months. It might be a little bit more chop before it begins to round up and start going much higher. But these are the types of things I look for, so to speak.
Yeah. Well, you do have the Dow Jones Transportation Average. A lot of people like to look at getting pretty close to knocking on all-time highs. If not, we'll be getting there soon. But I know a lot of people like to look at that as a kind of good indicator for the market as well. But no, I think it is interesting because there's certain things with charts that I think maybe don't make a ton of sense like short term, but longer term, like you can see it in the precious metals, you can see it in some of the stuff for energy and some of the ratios comparing one asset to another. I think it's definitely something to pay attention to.
The ratios are definitely interesting for sure. They can be pretty fun at times.
Yeah. I guess to go back to energy, we kind of talked a little bit about the broad sector and oil and gas, but I wanted to get your thoughts on natural gas and where that is, what your kind of view is there, because it's been, it's funny because you had a bunch of people on Twitter talking about $5 natural gas and all this other stuff, and it's like, okay, it's probably time for a little bit of a cool down, and now we're down into the kind of roughly low fours after another rough day. But what are your kind of thoughts on natural gas and maybe some of the producers in that area?
I hate natural gas. Hate it. I used to work. I mean, so let me take a step back. I used to work in it, so I'm like I have a fondness for it and an understanding of it. But I I just don't see it because it's just so levered to weather.
Yeah.
Um, I think there is a thesis there for sure. Um, and I wrote about it actually like in April or March, but I thankfully haven't really been acting on it. It's just been such a choppy trade. Where you have this declining production in the Permian, and if global supply dries up, and basically when oil shoots up, nat gas will go with it, right? You've seen kind of like a weather and LNG related spike over the last few months. People like to tie it to AI. I mean, there's definitely some AI pull coming from all this stuff that the data centers needed. It's the baseload fuel, so to speak. But I'm I have a very hard time marrying AI with nat gas because of the basic premise that if something like EQT breaks out, if EQT goes to like $80, that means we have a huge inflation problem. And if we have a huge inflation problem, that means AI stocks are dying, like completely crapping out. So that thought process makes it very, very hard for me to actually throw natural gas stocks into like the AI basket, so to speak.
Yeah.
Um,
It is interesting to see because like I own a little bit of Antero, not anything like massive, but um the the whole setup I think is very interesting, like on a long term secular basis. But I would I think go a little bit insane trying to trade the actual like commodity itself, just with the moves it has, and like you said, how it's so tied to weather. But I mean, people do it. I guess some of them make money, but um, it's a tough. I mean, they call it the widowmaker for a reason. So I think there's opportunities potentially in natural gas, but it's more like on a long term basis than trying to trade the underlying commodity. So
yeah. So I mean, here, let me look at it. Um, well, I mean, yeah, look at it today, right? Like, funny enough, I haven't even followed this, but I'm positive that what today came out that a couple weeks from now is going to be a hell of a lot warmer than we thought before today, right? I'm assuming that's what happened because natural gas is body front run natural gas is body bagging 8%.
yeah, it's probably
Um,
something to go from 550 touching 550 last Friday to 423 right now, right? There's
yeah,
definitely a change in what people are expecting for this winter.
yeah. So basically, like for me mentally, where I'm at, it's like I know these markets and I can even dissect them a bit more regionally if I wanted to, in terms of like various locales and the physical gas markets and stuff like that. And there's definitely opportunity there, but I just know that that's not really my bread and butter and how I've made money in the market. So if I start worrying about that all the time, I'm going to my eye is going to be off the ball, like where I actually am traditionally profitable.
Yeah.
Um, so yeah, I just don't for those reasons, I have a hard time looking at natural gas.
Yeah. Fair enough. Fair enough.
I mean, I like Antera. I'm a little surprised by some of the changes they've been making lately. But I suppose
What do you think of their recent acquisition? I don't know if you've looked at it at all,
I
but
haven't I haven't dug into it, to be honest with you. I find it a pretty big corporate shift, bit of an alarming one. Basically implies that inventory is drying up,
hmm,
um, which is a bit of signal, right? I mean, they've always been kind of like a wet their wet gas and their leverage to NGLs has always been rock solid. Um, and that's why I've always kind of liked the name relative to peers. But I mean, they seem to be signaling that inventory is not what they previously thought. Um, but so I don't really think of it quite as positively for that reason. How did the stock react? Did the stock like the news?
yeah, I think it was. I mean, it's tough to say because like you had natural gas getting hammered like
Oh
to the
yeah,
tune of
I'm looking at it right
seven
now. I guess
seven
it's
eight
like,
percent,
yeah, it's like
and
impossible to know because net gas
and
is down eight
and
percent.
with like that news, I think it was still like green on the day, but then it's kind of come back in a little bit in the last couple days. And I think it's hard to like attribute too much of that to like the deal reaction versus okay, natural gas prices at beginning just absolutely smoked for the last like 3 or 4 days. So, I mean, from the people that I've kind of talked to and the people that dug into it, they seem to like the acquisition. But um, I mean, it's hard to know how that is gonna do, especially if natural gas is gonna continue to get nuked. But I mean, I kind of think that we'll see natural gas hang out in 4 to 5 unless we start to see like some storms and all that. But again, like it could go back to sub 3 for all I know. Like that's the thing is how fast like things change and natural gas. It's not like a long secular trend like something in precious metals or something in base metals. So it's easy to get kind of flung around in that one. So
Yeah, it's not really my favorite place to play, even though I have some experience in it.
yeah,
Um,
fair. That is maybe a good way to get into another area of the energy market that you have been interested in, which is uranium and some of the
mhm.
kind of stocks um and that part of the market. But what are your thoughts on the uranium setup for like the next year, next couple of years? Because I think everyone can see the writing on the wall that the uranium price is probably going to head higher over the next 3 to 5 years, like as like a secular trend, and some of the miners are going to benefit. But it seems to be one of those trades where a huge chunk of the market gets positioned, um, gets offsides at certain times where sentiment is either completely blown out and no one wants to touch them, and that's when they're about to rip like 50% in the next 6 months, or everyone is celebrating and talking about uranium prices are going to the moon and it's going to happen basically imminently. So, what are your kind of thoughts on the uranium setup from here?
You know what? I think it's actually very straightforward. Um, a bit more straightforward than some people may want to admit. This Westinghouse news with the White House, right, where they want to build all these reactors. If you dig into kind of the structure of the agreement, the U.S. government gets to participate in a Westinghouse IPO, and it's basically written that they want to get that executed sometime in 25, 26, in 2028, basically before Trump 2.0 is over. So if you just work backwards from that, right, and just a literal common sense type of sniff test, if you want to IPO the thing in 2028, you definitely want really clean financials or clean-ish financials for 2027, and you also would prefer to have something to present for 2026. So the United States government itself is maximally financially incentivized to figure out a way to make this trade work as well as it possibly can. So with that in mind, like who am I to argue with that?
Yeah,
You
that's
see what I
the
mean? It's just
that's the
like,
thing about some of the interventions on like the government level, whether it's like taking stakes in individual companies, and like people can argue back and forth about is it good, is it bad, or you can just kind of accept the fact that hey, this is where things are now, and they need to have a focus on critical minerals and rare earths and some of these different things to right make sure there's a supply, because some of these things are right, they're not it's not a 6 month process to start producing or refining some of these things, and it's it's an interesting place to look. And I don't know if you have any thoughts on like any specific names that you like, or any kind of broad brush predictions for uranium price. But I mean, I think there's a pretty good 3 to 5 year setup. I just don't know what it seems like it's sort of become attached at the hip to the AI trade in the last kind of basically since April, it seems like. What are your kind of thoughts on that?
Yeah, I mean, look, I think really the people are making the correct scientific observation, right? If you want to use something that isn't natural gas that can provide baseload power, the easiest way to do that is to shift towards nuclear energy, uranium, right? So I mean, it just is it's a big step change, so it tends to take time. It's not going to be very quick. But with that said, I mean, it's a very material shift in global supply and demand, right? I mean, there's a lot of demand coming online that didn't really previously exist. So I mean, look, in terms of names, I have my screen up, right? So the abundantly obvious one, especially because of the Westinghouse relationship, is Cameco, right? It's digested the news quite well. The Westinghouse news. I'm basically looking at the monthly chart, right? So this October news provided a pretty wide candle because it was a big move down, and then momentum stocks got killed, so it went back down. But it's kind of been settling inside of that October monthly candle for a while now, which is good. It means the stock is kind of finding a level, and it's starting to kind of behave a bit more normally now. It's stabilized, for lack of a better way of describing it. So I mean, look, I'm not really providing you a super earth-shattering opinion, right? If the trade works, Cameco is going to work. With that said, I've continued to have my eye on energy fuels just because of what I feel is like the strategic importance for this company relative to what the United States is doing. I continue to think that this is going to be like a strategic reserve type of name for the U.S. It seems to have found a bottom. It's kind of been in this range since November between like 14 and 16. It's like right around the high end of that range today. So it might need more time because of how fast and linear the move up was to like 28. It might need more time, but if it can continue loading in this range, to me that says that it's probably going to build up another move higher. And then, I mean, the thing that I like about this chart, and I talked about it with Brandon Balo a few weeks ago. I mean, if you look at the monthly here, you zoom out, this stock has price memory of being a much more expensive stock than it is right now. So I'm going all the way up to this candle wick in February of 2011 where it ran to $80 a share. I'm not saying that the stock is going to $80 a share, but I think a move like that is on the table in the right kind of bullish environment where everything lines up, where the commodity runs, where the government is involved to prop it up, where Westinghouse is kind of utmost strategic importance, all that stuff, like the perfect storm. So for that reason, I continue to like you, but I admit it tends to behave like a momentum stock right now, and it's not really the best environment for momentum stocks. And on top of that, the stock is in a range. So
How do you think about dilution when you go back and look at long-term charts like that? Because my guess is that shares outstanding has just ballooned like crazy since the last time it was trading at those prices.
So to be honest with you, the reason why the stock went down the way that it did does not matter to me. Like I can appreciate that, like the company must have definitely been mismanaged for the move that happened to have happened. Also, I mean, going back to 2011, right? That's like understandably when we entered kind of like a different uranium cycle, so to speak. So clearly management, I would imagine management was not really behaving in a way that suggested they are mindful of the uranium cycle. But let me phrase this differently to you. I mean, they've done a big offering right now, so dilution risk is at least somewhat off the table at the moment. If the stock is ever able to take out these local levels right around 27, 28, it just becomes kind of like a how high can it go situation.
Yeah, interesting. It'll be
I'm not in it. I'm not positioned for it right now. I've had mixed results in this name. Frankly, I should have been looking at it around here. I arrived to the table a little bit late. But it's definitely something I continue watching. I just don't really want to be involved very actively while in a it's just like in an extremely visible range right now
yeah.
in here, and
You're looking
it's
for
just gonna keep
17,
chopping around.
18 when it's
Yeah, I mean,
starts to wake up.
if it can make a move over this 50-day moving average, this blue line, I think that'll be extremely actionable.
Yeah, interesting. As far as other sectors you're paying attention to, I've talked to a bunch of people that are very interested in the chemical space as like a bombed out, like cyclical turn play. And I think the ags are interesting here too. But are there any like spaces that are very out of favor right now that you're kind of on the back of your radar to keep an eye on for 2026?
And I think oil and gas, to be honest with you, is very out of favor. Specifically oil. Oil is the one I'm looking at. I just prefer to get involved when I see XOM living above here. So the all-time high is 121.
Is your screen still showing energy fuels?
Oh, weird. Okay, one sec. Let me change that. Share this tab instead. So I'm looking at the Exxon monthly chart. It's approaching the all-time high right here, right from 2024. Hard to believe that Exxon went all the way back up to that in 2024. But anyway, once Exxon can settle above that for like a week, I think that'll be a signal that this move is really underway. I'm just a little hesitant right now because I don't see it. But oil and gas is going to start rearing its ugly head. That's going to be the thing we can't print out of, and that's going to be, I think, the long game that the Saudis are playing right now. And I mean, our production isn't really helping the cause, and you're past the point where capital budgets for 2026 are being set with the shale guys, and with oil in the high 50s. I mean, you're not going to get any sort of production ramps into next year. So I think at some point towards the end of next year, we're going to start seeing oil rear its ugly head.
Yeah. I mean, it is interesting to see kind of the move that the whole space has had really since the April bottom. Like OAH has been flying I know that's like basically Schlumberger plus some other stuff, but you kind of see the move that has happened in XLE, XOP, and some of these different things since April. Like it doesn't seem like they're it seems like there's at least some money starting to get positioned for that outcome that you're expecting in kind of the back end of 2026.
Yeah, we'll see. I don't know. I'm certainly curious. I'm ready for when it's time, but I just have a hard time picturing it being time quite yet. Do you think it's sooner than I seem to believe?
I don't know. I mean, I think the way I kind of look at it is like eventually people are going to realize that like 58 a barrel is not the right price. And like I'm not trying to use like some like gold to silver ratios like, oh, this is going to be some great timing mechanism, but you haven't really had, I think it's happened like touched sub 1 briefly, but you haven't had silver more expensive than oil effectively ever for any sustained period of time. And you haven't had oil to gold where it is now. And so, right, does that take some time to actually start to play in and people just look at, hey, what's cheap and we're going to buy it? I mean, it could take 6 months or a year, but does it take 3? I don't think there's a shot in hell we're looking at 58 a barrel in like 2028, right? So
yeah, I have a hard time seeing that.
That's kind of my thing is like, I don't know when oil's going to go, but if it starts to move significantly higher, like a lot of the ETFs, like I think Exxon as your kind of bellwether probably goes ballistic if we get to $75 oil. And if people start realizing, hey, like this is going to be a good place to be for the next 2-3 years, like when people figured that out in 2020, it was basically shoot the lights out for a couple of years straight, you know? So I think there's still like a bunch of opportunities in there. And I own like a little bit of Schlumberger as kind of the OAH flows bet, but there's, I think, a bunch of stuff in the whole area where it's just like, okay, if you're going down to 50, you're going to get, you're going to have a tough time short term, but 12 months plus, like, are you going to get run over owning some of the oil services names, some of the other energy names? Like, I don't think so. And I think, I remember you saying this, I think maybe the first time we were on a podcast, is that when like oil and gas is working, there's not a whole lot else in the market that's working. So I think that sets up for a very interesting 2026 whenever we do kind of get to that turning point.
Yeah. It sounds like we're on pretty similar pages. I'm kind of just in wait and see mode, for lack of a better way of describing it.
Yeah. So it's are you kind of watching oil price first or Exxon as kind of your main area of focus?
Exxon.
Yeah.
Exxon, yeah, because the price of oil can lie, but the price of the most important company can't, in my opinion.
Yeah, I think
as that might sound completely ridiculous. I mean, saying it out loud, I know that sounds it's like saying something that a little ridiculous, saying that in a pretty confident way. But I just don't see a universe where Exxon is breaking out, and that does not mean that oil is going to come too.
Yeah, well, that it is something where you see whether it's manipulation or not, like the Trump administration definitely doesn't want higher oil prices, and so there's a thumb on the scale there, and it kind of like I was watching a video the other day on silver and some of the precious metals, and this kind of goes back to, like, I think there's a thumb on the scale, and I wouldn't be shocked at all if there's like something similar going on with oil. But the quote from that is, if you want to buy silver and just basically bought the New York Open and sold the New York close starting in 1970, your silver is now worth like 15 cents an ounce. And if you just held it overnight, it's worth $331 an ounce, right? So that's not a organic price discovery during the market. But I think there's a lot of interested parties with oil, and eventually the physical market will kind of reassert dominance over like the paper market shenanigans. And like you said, like there's not going to be some massive glut due to a huge production wave from a lot of the shale guys, especially with oil sitting basically right around $60 a barrel.
Yeah. No, I mean, it sounds like we generally agree.
Yeah.
Might just take a minute is all.
Yeah. What else is on your radar as we start to wrap up here? What else is on your radar for 2026 as far as different areas to watch for, different things to be aware of? Like, I know you kind of mentioned that off the April bottom, you kind of expect roughly 12 months of pretty good times for the market, but what are you kind of thinking as far as overall market for 2026, different areas to look for, and potentially one item to watch out for as far as investors and what they should be aware of heading into next year?
Yeah, I think it's two-pronged, right? I think the market's going to be good, but a lot of the work I've done suggests that the second leg, which is basically underway, tends to be significantly choppier. You're basically seeing it with a day like November 20th. The first leg was interrupted with the October 10th candle when Trump said whatever it was that he said about China, but the market jackknifed like 2.5%. So expect more days like that. Doesn't mean the world is ending, but it's just going to be a choppier ride on the way up. I tend to believe we're going to probably end up somewhere in the neighborhood of 7,400 SPX in late Q1, early Q2. Cyclical stocks seem to be working pretty well. With that said, you're just simply not going to get to that level on SPX without the AI stuff participating. I would expect Nvidia makes new highs sometime in January. So I'm not going to put a target on that, but new highs means at least 220, right? It's 170, high 170s today. I'm not really tracking it live as we're speaking. And I'm watching out for inflation because, I mean, if we're going to just continue cutting rates in an environment that doesn't really necessitate cutting rates, periodic tables, like we've said, is already getting lit up. At some point, oil is going to start participating, and when that happens, it probably casts a shadow over the rest of the market. So definitely mindful of that, but not anytime soon, in my opinion.
Yeah,
more of like a second half of next year type of thing.
What are your kind of expectations for? I guess since silver is kind of top of mind for everyone as we're looking at 64 an ounce, and gold, precious metals is kind of the barometer on kind of trust in the financial system, all these different things, and geopolitical risk. What are your kind of what's your general thoughts on what we could see as far as precious metals? Like, I think the run's set to continue. I don't know how high or how far, but do you have any kind of rough estimate for where we might see gold and silver in the next year?
I mean, the kind of Captain Obvious level on gold is 5,000, right? If I had to guess, and
yeah, big round number.
Yeah, on silver, I mean, it's probably going to at least 70. I mean, that sounds a heck of a lot less controversial the way it's been running in the last 2 weeks. It's up, God knows, 2 or 3 weeks.
At least like 20-25%. Yeah.
Yeah. I mean, it frankly could go a lot higher than that based on the kind of breakout that it's making. But these types of moves tend to be very, very jagged. So I don't know how or why, but I would imagine in Q1, these precious metals are going to enter kind of like a multi-month period of consolidation again, similar to what we saw with gold and silver earlier this year, like in the middle of the year, probably around the summertime, if I remember correctly.
Just a cool off period, though. You don't think it's a one and done type spike for silver? Because I know there's a lot of people that are like,
I'm not in the business of making like huge, like macro
$100 silver and then collapse. Yeah.
Yeah. I would imagine something spunky happens with the dollar in Q1 that makes these precious metals a little flabbergasted for a couple weeks or a couple months, but it'll probably just be a blip on the radar screen if I had to guess.
Yeah. No, I think, there's a lot of calls for like $100 silver, 150. Like it's going to be the big one. And I'm like, look, I don't think you need the big one to make money in some of the silver miners, but that's kind of a separate point. And with where I kind of think the industrial side of things and supply and demand for silver, like I don't think this is something where it's like a Hunt Brothers financial squeeze, or I don't think it's something where it's like, okay, you get one big run, parabolic blow off, and then it's collapsed back down to 40 an ounce or something, right? I think this is a move that's going to last a significant amount of time. It's not going to be over in short order. So
I tend to agree with you, man. I very much tend to agree with you.
So as we're starting to wrap up here, where can my listeners find you, find your work, find you on social media? Where should they look for you?
Yes, sir. My Twitter handle is at purpledrink_LLC. Not an actual LLC, but that's aside from the point. And on Substack, just check out Purple Drink's Market Musings. I write on Tuesdays, Thursdays, and Sundays. And I also just post my live trade executions. Just been doing it since about March. It's been fun. I think you're in there occasionally, so see what comes of it.
It's definitely worth a follow. Got some interesting ways to look at the market, and definitely has a background in energy that I think is going to be helpful over the next 12 months, but definitely over the next 3 years. So before I do let you go, I do have to ask my traditional closing question, which is, what book should I add to my reading list? Can be history, finance, fiction, nonfiction, whatever you think.
I'm so bad at this. I don't read a lot of books, man. The only books I read are the books I read to my kid, my 4-year-old son, and my 3-year-old daughter. I mean, I'm pretty well read in the stuff that I'm interested in, but it's more like condensed. So let me think. What is something I want to read? What did I tell you last time? Did I say Harry? I think I said Harry Potter when I spoke to you last time, right?
Possibly. Let me pull it up.
Yeah, it's been a while. I don't expect you to remember it.
Yeah, it was Harry Potter. You have a good memory. So, yeah. Anything and everything is, I mean, doesn't have to be anything specific. Could also be podcasts or anything that you think is interesting, but worth checking out content wise.
You know what? Fine. Let me give you that. I'm a football fan, and I think the best thing out there is the Athletic NFL show. They actually talk about football, and it's not hot takes or anything like that. So I would highly recommend that. Big fan of Robert Mays.
Is it going to be telling you like what parlay bets to do and any sports gambling shit, or is it actually talking about football?
No. They're straight up talking about football.
Okay, yeah, that's the one thing that drives me nuts. Like, I don't watch a ton of sports anymore, but when I do, it like absolutely drives me up the wall when it's like, oh, sponsored by DraftKings, and it's telling you like some of these different things. I think that's a huge negative for society, like the sports gambling shit and like the prediction markets that are gambling markets but pretending to be something else. Like, I think that's a huge problem we're gonna have to deal with at some point. But
I think it's very, very, very unhealthy for young men.
Yeah, I think it's unhealthy for society too, but that's a topic for another day. We can maybe save that for next time, but I really appreciate it coming on. I think people will find a lot of the conversation interesting on what's going on in the market, some of the different moves in the commodity space, different areas to be keeping an eye out on. And I think the back half of 2026 being a good time to own some of the energy names. So I think with that, we'll be wrapping up. Thanks for stopping by, and we'll see you next time.